I'm going to guide you through a step-by-step way of which you are going to learn this modified SMC strategy and apply it to your own chart, consistently generate $10,000 and above on a daily basis. Stick with me as I guide you through the process. So I'm going to be introducing a new concept into my three concepts that I have always given you in my video. It has always been three, but today I'm going to introduce a unique concept. Firstly, I will take you on directional bias. Secondly, I'm going to take you on point of interest, the point which you are ready to buy or sell from. Thirdly, I'm going to take you on liquidity concept. This is a very important aspect of trading you wouldn't love to miss. Upon uploading my short videos and daily analysis, so many people have been asking, please sir, what is liquidity concept? I'm going to be answering that question today. Last, I'm going to take you on LTC confirmation. It's a very important aspect of trading. These other three can operate, but they cannot operate without this LTC. If there is no LTC, we are not trading. So you should see how important this LTC is to us that are trading this simple and modified SMC strategy. Let's get down to business. So let's take the first one, directional bias. When you approach your trading view, what is that first thing that you are looking out to see in the market? Firstly, when you approach the market, you will carry out a top-down analysis. And how does this top-down analysis operate? This top-down analysis operates by properly reading the market structure. All right. So first thing first, when you approach the market, you look at the highest point of the previous trading range. This is the highest point of the previous trading range. This here is the lowest point of the previous trading range. By marking out these two highs and lows, you have already made work easy for yourself 50%. All right. So when you mark out this, you know that we now have what? A trend. Now, when this trend is going on to a certain level, we start expecting a pullback. This can also be called a retracement. When this retracement phase is forming up, this place here, we mark it as our swing high. It's not usually the break of structure. It is called a swing high. When we mark out a swing high, let me quickly put it down so that we can understand what I'm saying. At first, it's called a swing high. I will be representing swing high with SH. When you mark out the swing high, you mark out the lowest point of the trading range. Let's call this our swing low. This is the lowest point of the trend. This is the highest point of the trend. When you see something like this, what you do is you quickly mark out the trading range. This becomes our trading range. This is simple, right? So now let's imagine that everything that's happening in this place here have not yet happened. All right. Let's only focus on this place, on this trading range. Everything that happens here has not happened. When the market is pulling back, we look forward to sell from this resistance level. You see, we look forward to sell to the support zone. When we get to the support level, we look forward to take buys upon proper LTC and a proper reading of liquidity concept. We take trades from here to the upside, we generate profit. So when the market crosses this swing high, immediately you know that we are now operating in a different trading range. So this here becomes our break of structure. See, immediately we mark out our break of structure, indicating that the market has actually crossed this trading range here to the upside. You know that we are now operating in a different trading range entirely. So we are going to update our swing low. Swing low, remember swing low means the lowest point of a particular trading range. Then after updating this trading range, the market gives us another high. This high is called a swing high. This break of structure, ignore this break of structure first, it's called a swing high. When this pullback is coming down, we look forward to take sell opportunities from this resistance zone to take sales down into the support level. As simple as that. When the market pull back to the support zone, we look forward to what? Take buys. Immediately the market crosses this swing high, it becomes a break of structure. So when you see occurrences like this, what should come to your mind is that we are in an uptrend. So we look forward to take opportunities that will lead to the upside. As simple as that. So we expect that the market comes into the support level so that when it gives us buying opportunity, we are going to buy from here. and sell at this point, right? But then the market does not move in an uptrend forever. The market moves in an uptrend and sometimes it moves in a downtrend. So this case you are seeing here, the market traveled to the support level instead of the market to respect this support and then give us higher prices. The market did not respect the support. It broke the support to the downside, causing this place to become, instead of it to be our normal swing low, it has now become a change of character. It means the market has changed its character from giving us higher prices to giving us lower prices. So when you see occurrences like this, what you should look out for, you should update your swing high. Now this swing low is no longer valid. You get why? Because we now have lower prices. So we are looking forward to update our swing high. After updating our swing high, what do we expect? We expect the market to pull back from here to a certain level of resistance. Then after pulling back to that resistance level, it gives us lower prices. You see, immediately we confirm the lower prices, we kindly mark out our break of structure. After marking out our break of structure, we update our swing high. You see, now we have a new trading range. So we are expecting that now we have a new trading range. We are expecting that the market travel down to this resistance level and then gives us lower prices on a consistent basis. When this is going on, we are always updating our break of structure so that we will always know where the market is operating from. You see, pretty much simple. But then the market does not always move very simple like this. The market have so many ups and downs. So I'm going to take you a more complex market structure. You see how this looks. The first example was very straightforward and clean. You know, in a school setting, they will teach you in class. Then after teaching you for a while, they will give you class work. And in your class work, you see something differently that you need to apply your wisdom for you to know what is going on. That is the same thing over here. So when you approach this chart, you might begin to panic or you'll be kind of confused. Don't be confused. Let's get down to business. First thing first, you want to look out for the highest point of this trend. What is the highest point of the previous market trend? This is the highest point. What's the lowest point? This is the lowest point. Once you are able to identify these few things, these two things, trust me, you wouldn't have much problem. Let's call this our swing high for now, indicating that this is the highest point of the trading range. Something I want you to note here, the whole of this place, let's imagine nothing has happened here. So everything here, just put it behind your mind. Nothing has happened. Let's focus on this one. Let me explain a few things before we get deep. This is the lowest point of the market trend. We mark it out clearly. So clearly what you are seeing here is a trading range. This is our trading range. This is the swing high. This is the swing low. Most important things to note. Then after that, we have a trading range. Now, listen to what I'm about to explain to you. Whatever thing that happens inside of this place here is internal structure. Once you understand that this thing here is internal structure and you are able to read them as internal structure, you will have peace of mind. Do you understand? How do you read this now? When the market gives you an expansion, then it starts giving you a ranging retracement or pullback. You will clearly know that all the things that are happening inside of this place here is internal. So when the internal is ranging, you kindly treat it as it is. While this sell is going on, you can actually leverage on the opportunities that are being created from the internal activities. You get the opportunities that are being created internally, you can leverage on that opportunity and take sales. But you should note that this is an internal activities. Once your pullback gets to your support level, what you are expecting is higher prices. Once these higher prices start, all the things that are happening inside of this place here, they are all going to be liquidated. That is where the concept of liquidity is going to come in. All right. Now you know that we have a break of structure. You just sit somewhere around here, tap in, get a sell. When you get your support level, you close out and start looking for buying opportunities to the upside. Now, this is where most people make mistakes. I need to explain, and I need to explain this thing like in a more clear term so that you are going to understand. Once the market breaks out of the current high, this is a higher high, right? When the market breaks out from here, this place, this swing high here, automatically becomes a break of structure. So you know that you now have a new trading range. Immediately you confirm this break of structure, you kindly update your swing low. This is where so many people make mistake by thinking that this is their swing low. This here is not your swing low. Your swing low is in the lowest point of the trend. And if you see this trading range here, if you see this trading range, this here was the lowest point of the trend, not this one. This occurrence also occur inside of this trading range. You get, but if you have something like this, that is where you can say that okay, this is the lowest point of the trend because this break of structure occur here. You understand? So now you should note that this here is the lowest point of your trend. So when the market comes, it will likely come back to somewhere around this place here before giving you an entry to buy. You understand? As simple as that. But most time the market does not just move as straightforward as this. In a scenario whereby the market comes to a certain point like this and then refuse to respect the support level and give us a break to the upside, what can you say in this aspect? We can clearly see here that the market has actually changed from giving us higher prices to giving us lower prices, indicating that the market has changed its structure. Did you see that? Pretty much simple. So now immediately you get this occurrence, you kindly spot out your swing high. What is your swing high? The highest point of the trading range. This is the highest point of the trading range. So this mistake again people do on a consistent basis by thinking that is this here is your swing high. This is not your swing high. I'm going to explain this in this is gold analysis. We are going to backtest this trade on gold, a trade that we took live in this community, and then we share it before it happened. While it was happening, we still share the insights to look out for in the trade. You get, so we drop it as a YouTube short. You can go and check it out. It's there, right? If you are new to this channel, kindly subscribe, turn on the notification bell because we drop daily bias, a more like a daily teaching, a morning routine every blessed morning. We share you inside this academy. Turn on the notification bell so that when we are sharing updates in the morning, it will get to you and you get to replicate the same thing in your trading view. And then when opportunity comes up, you tend to leverage on that opportunity. Don't miss out, please. I'm going to show you something that happened inside of this place that makes me really want to explain it. This is not your swing high, please. This is more of a liquidity zone. This here is your swing high. This here is an internal activity. This is your swing high. This can easily be liquidated. You get, to respect this place here. You should take note of that. So when the market is pulling back like this, you can look for tradable opportunity from this resistance level to buy. When it gets to this support level, you see that you can look for what? Selling opportunity. As simple as that. Once the market gets to the resistance level, resist with LTC, you sell to this point, then you break structure. After breaking structure, you update your swing high. The same thing over and over and over and over again. So now we update our swing high because we have a new trading range. After updating our swing high, we mark out our break of structure. Simple. You see, now we have a new trading range. What are we expecting? We are expecting a pullback. You see that? Simple. It's just the same thing over and over again. You get, so after explaining this, I'm going to take you to a place where you can read the market structure in a more clear terms. It's not as confusing as this, but then let's check it out. The line in black represents 4 hours time frame. The line in red represents 15-minute time frame. Pay attention closely because if you should make any mistake in this area I'm about to explain, you get a lot of things wrong. This is a sell bias. The market is currently selling in this picture. Do you understand that? Good. So when the 4 hours time frame is moving this way, the 15-minute time frame is moving in a more detailed way. Now when the 4 hours time frame is pulling back, the 15-minute time frame will give us a change of character. You get that? This change of character here indicates that the 4 hours time frame is about to pull back. So we, with our own modified SMC strategy, we follow the market from here and pull back again because of this 15-minute time frame change of character. That is to tell you that the 15-minute time frame is giving us a detailed information. Now when the 4 hours time frame is traveling like this, the 15-minute time frame will give us a series of break of structure. You get, the 15-minute time frame will continue giving us break of structure until when the 4 hours time frame gets to a certain resistance level, since this is a downtrend. When it gets to a certain resistance level and the 4 hours time frame is about to give us a pullback, the 15-minute time frame will quickly give us a break of structure and a change of character to the downside, indicating that the 4 hours time frame is about to pull back. What do we do in this aspect? We kindly mark out our zone and then follow the downtrend you get to give us a lower low. All right, as simple as that. While the 4 hours time frame is coming down, the 15-minute time frame will continue to give us series of break of structure to the downside. What I just want you to understand in this aspect is that the 15-minute time frame is giving us a detailed information about what the 4 hours time frame is about to do. You get? Let me explain this using this example. You are looking up to an organization that is performing really well in the market. You get? So you really want to know how they do things. You proceed by having a spy in that organization that always tells you the project that the organization is having at hand, right? So every in-house meeting that that organization is working on, that spy is always telling you. So that is the work of the 15-minute time frame. The 15-minute time frame is the spy that is telling us what the 4 hours time frame wants to do. I used to have questions like, what is the best time frame to trade? For me, there is no best time frame to trade. Okay, all this time frame you see here combined to give me just one thing, to give me a trade. The 4 hours time frame here gives me the picture of the direction that the trend is currently heading to. I use the 1 hour time frame to see things more clearly. You get? The 15-minute time frame here gives me the detailed information of what 4 hours time frame is doing. The 1 minute time frame gives me LTC confirmation. The 3 minutes and the 5 minute time frames here works together to give me an order block while my LTC confirmation is going on. After giving you this explanation from the basic market structure to the complex market structure right to this one, I'm going to take everything I've said here back to the chart. Let's go back test the real market and then see how we manage to secure 27 risk to reward ratio on gold. Let's get down to it. What is the first thing you want to look out for in this whole chart? Firstly, I told you that we are going to look at the highest points of the previous trading range. As you can see, this was the highest point of the previous trading range. You can see that when you look out, after that, we look out of the lowest point of the trading range. That here, this here was the lowest point. So let's clearly mark that out. This becomes our break of structure. This here becomes our swing low, lowest point of the trend. As simple as that. Then after that, what do? We mark out the highest point of the trend. We have marked out our break of structure, the swing low, and the swing high. What did we see here? The market gave us a lower high. After the lower high, it traveled down to this place and gave us a very nice higher high. You can see that this also symbolizes a double top. Then after that, we see that the market pulled back to a certain level of support. After pulling back to this place, it gave us higher prices for a while. After that, it gave us a change of character, causing this swing low to become what? A change of character. Did you see that? So immediately after the change of character, what do? We update our swing low. You see it? Immediately after that, we update our swing low. We have a break of structure here. We have a swing high indicating the highest point of the trend. We have a change of character indicating that the trend has shifted from going up to coming down, from traveling bullish to coming what? Bearish. What are we expecting after this swing though? We are expecting a pullback to a certain level of resistance here. After that, we get lower prices. Alright. Now let me go down to the 1 hour time frame and show you how this thing also looks like in the 1 hour time frame and how we were able to channel ourselves down to a trade that gave us over 27 risk to reward ratio in profit. This is how the 1 hour time frame looks like from the place of which we are ready to operate from. Then let's go to the 15-minute time frame. Remember what I told you about the 4 hours time frame and the 15-minute time frame. So now, when the 4 hour time frame is taking big moves, the 15-minute time frame on the other hand is taking smaller moves. That gives us what? A detailed information about what the 4 hour time frame is doing. So now let me show you here how that example was able to help us understand the direction of the trend. So now, when the 4 hours time frame gave us a change of character, when you go to the 15 minute and we saw that we had a high here, we had a low, where this becomes the lowest point of the trend, and we had a change of character from the 15 minute time frame. See it here, indicating that the 4 hours time frame is about to pull back. After showing you that, I had to move over to the 1 hour time frame so that things can be more bold and clear for you to see and know what is going on. After this change of character, we had a pullback here. Then we had a higher high. After this higher high, we had a break of structure. Remember the first example that I gave to you about reading market structure in the basic market structure. After this higher high, what we are expecting is a pullback to a certain level of support. Then we take higher prices. As simple as that. We mark out the highest point of the trend, which is our swing high. After the swing high, we mark out the lowest point of the trend. The lowest point of the trend, we call it our swing low. This is the lowest point of the trend. This is the highest point of the trend. We have a trading range. This is our trading range. What does this imply? This implies that we are more focused on the activities that are going on inside of this trading range. You can see it, right? So I'm going to remove this rectangle so we can see the naked chart and then apply a few things. This is where I introduce you to the concept of point of interest, which is the second step, right? So the point of interest has to do with a place where you are ready to take a buy or a sell from. In this scenario, we are expecting higher prices, so we are very much focused in a place where we are ready to take a buy. Now, what are the criteria for knowing a very valid point of interest that is going to play out? Number one criteria is that a point of interest must have a fair value gap. You get, now you can see that in this scenario we have this point of interest here, we have a fair value gap here. This is actually a fair value gap, the distance between the wick of the first and the third candle of a particular scenario. Now this is, let me enlarge my screen so I can explain this properly to you. The distance between the first and the third candle of a particular direction. Now you can see that this is the third candle here, this is the wick of the third candle, then this is the first candle. Obviously it doesn't have a wick, so this area here is a fair value gap. That is, there was no transaction during this period of time. Then the number two criteria is liquidity concept. What is liquidity? Liquidity is a place where the market has given fake promises for early buyers or early sellers. In this scenario, we look at this place as liquidity because there is an order block here. Right here, you can see another order block that is being tricked by the early buyers and sellers. You can see that when the market came to this order block, it respected it. You can see that when the market came to this order block, it respected it for a while, went up, gave us a fake change of character here, came back, respected this one for a while, go up again. All these things here are pocket of what? Liquidity. You can see this is where people are being tricked to put their people's stop losses are in these places here. You get, many people are having their stop losses here. The market is going to come back, liquidate all the stop loss, get to the point of support. You get, this here is a clear order block that indicates support. You can see it. The market is going to clear all these people, clear all this liquidity to the downside, comes to this place, give us LTC. Then from there, we take our buy. As simple as that. Still on the criteria of knowing a proper order block and point of interest is that a point of interest must have an order block for it to be valid. An order block that is not yet mitigated. What do I mean by mitigation? Mitigation is a scenario where you have an order block, then you have the market coming back to retest it. Like now, this order block is no longer valid. Why? Because it has been retested. You get, so this one here has not been retested, so it is still a virgin order block. So this is one of the criteria of knowing a proper point of interest. So it's very, very valid, and we are looking forward to take our trade from there. So let's mark it. Let's mark the order block out. So we see we have a very fresh order block here. What we are looking up to is for the market to come down to this order block, liquidate all the early buyers that are here. This is where the number third concept comes in, concept of liquidity. You get, as I earlier said, liquidity is where people's stop loss are mostly in the market. You get, people that are early buyers and early sellers, Our plan as SMC traders and our plan in this modified strategy is to liquidate. We are in support of liquidating anybody that is having their stop losses in this place here. Then we take our buy. Then when you will see that there is another liquidity pool around these places here. You get when the market is giving us series of break of structure, people that don't know how to read the market structure properly, their stop losses are in this place here. Their entries are here. They are all waiting for the market to come down to come to this place here, tag them in and then sell. But they are wrong. They read the market structure wrongly. So we are still going to use them as liquidity. So when the market takes liquidity from the sell side, after taking the liquidity from the sell side, the market will now go and take another liquidity from the buy side. So that is it, as simple as that. There's the concept of liquidity. If you are looking how to take your entry from any place, you see that you have many zones of liquidity there. You know that entry is very, very valid. Why? Because there are so many people that are having their stop losses in those places, of which the big guys are going to like liquidate. Let me show you how the liquidity pool look like. I have something like this. Most time when I drop my morning trade, you see write-ups like this, you see dollar sign SS everywhere. You begin to wonder if this is just the liquidity you get. See how liquidity is being piled up here. We expect the market to liquidate this other side. After liquidating this side, it will now clear all this liquidity and then give us a very swift risk to reward ratio. So let's play price and see. After marking out your point of interest, marking out liquidity levels, you are sure of everything, then you now further to wait for LTC confirmation. Alright, so we are waiting for the market to pull back to this place here and then give us LTC so that we can take a trade. Let's play price. Price has gone to our point of interest. So let me quickly introduce the concept of LTC to you. This is LTC confirmation. Now, this is what I want to see in the 1 minute time frame when we get there. I want to see a break of structure to the downside. We're looking forward to take buys. So I want to see a break of structure here. Then after that, I want to see a change of character. I want to see a change of character. Then after the change of character, I want to see an order block in a certain level of support. Then after that, I want to look at taking buys from this place here. So this is basically what I want to see. It's more of a head and shoulder pattern, right? So this is exactly what I'm looking for. Now, what is the importance of this LTC confirmation? One is to confirm that we are in the right side of the market and we are trading with the big guys. The market is moved by institutions, it's moved by hedge funds, and it's moved by the banks. You get, they are moving billions of dollars. You get, so we all that are on this chart are all retail traders. We are just trying to follow the moves of the big guys. Who are the big guys? The institution, the banks, and the hedge managers. Okay, so this is the best way of following those guys. You understand? When they are making their own moves, we study the chart and go with them. You get? So now, if the institutions want to take the market higher, we need to see a change of character from the 1 minute time frame in order to join the institution and ride the market. You get, as simple as that. So let's get down to the 1 minute time frame and then see how things operate over there, and then replicate the same thing and see how it works. Here we are. We have seen that we have a break of structure to the downside. After that break of structure, we kindly mark out the highest point of this very trading range. What are we looking at to see in this scenario? We are looking at to see a place whereby this market moves to a certain level of resistance, then continue. If it continues, it means that the market has agreed that it's going to buy, so we follow the buy. But if it keeps on going down, it means that the market is not yet ready to give us a buy. So we continue following it. You get, continue playing price until we see what we want to see. Let me see. Do we have a break of structure? No. We don't have any break of structure yet. Okay, it's like we have a break of structure to the downside. Okay, we have another break of structure over here. See it? Have another break of structure. So what do? We update our swing high. We're still looking out for the same thing, either this or this. You get, if we get this, it means that we have changed character. But if you continue going down, it means that the 1 minute time frame is still selling. So let's keep playing price. Okay, let's extend this. I also want you to notice something. You get, all this reaction from our swing high is actually liquidity. For a break of structure or a change of character to be valid, it has to occur with the body of the candle. If it occurs with the body of the candle like this, we can consider it a change of character. But if it keeps using wick to like strike this very swing high, it means that it has not yet changed to a break of structure, a change of character. It is still in a bearish movement. So let's keep playing price and see how it goes. It has still not yet changed, so it is still bearish. Okay, it's like we have a new, no, we don't have any other break of structure, so it's only this one. Okay, okay, let's play price. It's like we now have, okay, now, good, we now have a change of character. So this our swing high has automatically turned into a change of character. Our buying opportunity has been confirmed. You get, everything has been confirmed. So we mark out the lowest point of this very trading range. See here, this is the lowest point here. You can see it. So we can call this our swing low. Then we look forward to look for a tradable opportunity, right? First thing first here, we look for a point of interest. We have the first point of interest here. Then we have the second point of interest. These are the point of interest that have not been mitigated. You get, so this is how you spot out your point of interest. You understand? So in a 1 minute time frame scenario like this, the market might come here from here, respect this other block, and then start going up. Or the market might come and liquidate this one and then come down to respect this one before going up. So in a scenario like this, I will advise that you place your trade from here. You get, place it from here, keep your stop loss a little bit below. You get, if you watch me place my trade, you always see that I keep my stop loss a little bit below the swing low. If I'm buying, if I'm selling, a little bit below the swing high. You understand? So I will keep my stop loss a bit below, so that when the market comes down here and decide to like come and play around in this place, because the market might come and trigger, come until come and liquidate the swing low before it goes up. That is also a behavior of the market to liquidate early buyers. You understand? So we are protecting our capital by keeping a little bit of stop loss. So I'm going to go back to the 15-minute time frame there and check the point at which we want to take profit from. You get, it's a very, very important aspect. You need to check where you are looking forward to take profit from. So let me go to the 15-minute time frame. The first take profit is here in this swing high. You see it. The first take profit is in this swing high. Then this is internal activities, right? So we want to operate internally. We don't want to operate externally. The second take profit would be in, this will be our target. But then the market might want to come down to this place and start misbehaving. One of the reasons why I'm so confident that the market is going to get to this target is because we have liquidity over here, a pocket of liquidity over here. We have liquidity over here, so the market might likely liquidate this target. So we are going to put our stop loss. We are going to bring our take profit to this place. See it. Good. So let's say when the market gets to this place, we want to take our profit, right? So we are going to go back, play the market, and see how everything works out. You get? Mhm. Let's go back to the 1 minute time frame. Let's play price and see. It didn't tag us inside. It didn't tag us inside. It didn't tag us inside. Okay. We are tagged in. We are tagging guys. We are tagging guys. We are tagged in guys. Okay, okay, okay. Wow, it's moving crazy. It's crazy. It's crazy. So this is how it works. Very simple strategy. Anybody can apply this thing. Carry it to your chart. When the market moves to a certain level, there is what I always do. You get? I break even. I break even. This is about 24 risk to reward ratio. I break even a lot. I manage my trade. I manage everything. I do money management because my capital is more important to me than the profit I'm going to generate from any trade. You understand? Because when you have capital, you will always see opportunity. But when you don't have capital, you see opportunity and you have nothing to do with the opportunity. So I manage my trade. Once my trade moves like this, I move my stop loss from this place here to my entry so that if anything goes wrong, I'm not losing anything again. You understand? Good. So some people used to ask me, what, sir, do you advise I trade my capital or profit? From the early stage of your trading career, trade profit. When you have accumulated enough money, you can now switch to trading your capital. As simple as that. That's the best advice I have for that. So let's go to 15-minute time frame and quickly play price and see how it works. So when we had this break of structure here, when we had this break of structure here, when you are in profit like this, you tend to like add some position so that your profit will be much. You get? When we had this, I quickly put up this break of structure, spot out the lowest point of this market trend. You see that? This is this is the swing low, and then this here is a break of structure. You see it, BOS. It's a break of structure. Then when you see something going on like this, I kindly spot out this other block here. See it, this one here. After spotting it out, I enter another position from this place here. You see, I always keep my stop a little bit below. You understand? So I enter with another entry from here, targeting the same place. You get? Just here. So this was like 7 risk to reward ratio, and then this was like 19 risk to reward ratio. But then upon refining it again, we find ourselves in 24 risk to reward ratio. It's still all good. So you know that there's liquidity here. I told you the concept of liquidity. The market came, took out the liquidity from the sell side, and then it's going to take out the one from the buy side. You get? So let's play price and see how it works. Okay, we got tagged inside, you see. So this is how simple it is. One thing you should know is that I always drop this trade before they happen. Check my YouTube short, you'll see when I drop this trade bias, I even explain it before I even enter the trade. You get? Live trade, I always drop live trade. So you should consider subscribing to this YouTube channel. Turn on the notification bell so that if I'm dropping opportunities like this, you can actually leverage on the opportunities. You understand? So let's play price and see how it works. You see? Now this swing high now has now become a break of structure. So we have a new break of structure again. So after this, what do? You move all your entries, your stop loss to break even. When this thing occur, all my trades were at break even in this place here. I break even over 10 raised to reward ratio. You understand? So imagine placing this trade in a $100,000 prop firm account, risking percent per trade. Now we are risking 2%, that is risking $1,000 on this trade and risking another $1,000 on this trade again. That is generating over $27,000. 27 risk to reward ratio is the same thing as $27,000. So this is how simple it is. I'm going to be accepting new students by January. Registration starts on the 15th of December. The first batch of people that I am going to be bringing in and then in implanting this SMC strategy in their genes. You get, this is a one-time opportunity that you have to take. Registration costs $150. You get, registration start on the 15th of December. So get ready as we take our first student. Nice delivery. You see, as simple as that. This is what we do here on a consistent basis. Then I have a little advice for you. I have a little advice for you. The forex market has a lot of people that are operating in it. You get, they have a lot of mentors, they have a lot of bosses and the rest. Now, this is my advice for you. Look for somebody who does something that you like and you want to replicate and follow the footsteps of that person. You can admire the lifestyle of other people, but then when it comes to learning, learn from that very person. Because if you go and learn SMC, you learn MS, MNS, ROS, I don't know, you go and learn alchemist, you learn trend line, you learn support. At the end of the day, you are just playing around. You get, if you really want to learn, look for somebody that does what you know you want to do. If it's trend line you want to learn, look for somebody that the best person that trade trend line and learn from. If it's SMC, look for somebody that trade what you understand. You understand? As simple as that. There is no two ways about it. When you do this, you see that you have peace of mind. You get, in every of my video, I make sure I drop an advice for you. So stick around, subscribe to this YouTube channel, turn on the notification bell so that if I have any new update for you, it will get to you on time. You get, we'll see you in the next video.